Welcome to another episode of the Investing in Impact podcast. Today will be a little bit of a crossover. You'll hear this on the Disruptors for Good feed. In the future, I'm going to start sprinkling more of the Investing in Impact podcast into this Disruptors for Good feed. Those who don't know, the Investing in Impact podcast really talks to the capital allocators that are funding a lot of the startups that you hear on the Disruptors for Good podcast. So Disruptors for Good is really aimed at interviewing the founders and CEOs of these impact startups and companies. The Investing in Impact podcast focuses on the investors and capital allocators actually funding and getting those companies off the ground. So they align very well. And I think it gives a good perspective on, you have the founders who have the idea and create the companies, but you also need the financial backing to get those companies off the ground and scale to where they want to be, to impact as many lives as they want to impact. And if you're hearing this on the Investing in Impact feed, you'll hear this intro that's a little different today. So let's get into it. Today, we're joined by Howard Fischer, co-founder of Gratitude Railroad, a community-driven impact investment firm. Howard spent over 3 decades on Wall Street, founding and leading the hedge fund, Basso Capital Management, and holding senior trading roles at Smith Barney, Drexel Burnham Lambert, and other major financial institutions. After a long career in traditional finance, Howard made the intentional decision to transition into impact investing, driven by the desire to align capital with purpose and build a more equitable and sustainable economy. Today, through Gratitude Railroad, he's helping lead a growing movement of investors committing to funding early-stage companies and emerging funds that deliver both strong financial returns and lasting social and environmental impact. Over the past decade, the firm has catalyzed hundreds of millions of dollars into mission-driven ventures. Gratitude Railroad's overall mission is to grow a diverse, values-aligned community of investors, leveraging their intellectual, social, and financial capital to support entrepreneurs creating change. The firm operates with a clear set of guiding values: action, collaboration, and passion, designed to foster real measurable outcomes. In our conversation, Howard shares how his Wall Street experience shaped his approach to impact investing, the evolution of Gratitude Railroad, and what it takes to mobilize capital for good. Hope you enjoyed the conversation. We'll talk soon. Thanks. Thank you so much, Howard, for joining me today. Really excited that you took the time out of your day, out of your week, out of your busy schedule to talk about your journey. And now you're sort of venturing down the impact investing path with Gratitude Railroad. So before we get into all that, talk about your journey. You can kind of start wherever you'd like to, but take us through your sort of career path and career journey so far.
Well, guys, it's been a bit of a long one. But let's start with the fact that my basic goal was to get rich. And at an early age, even before high school, I felt that Wall Street was the place to do that. And I began reading things like Barron's way back when I was in high school, and read every book in my school library about finance. I attended Wharton at the University of Pennsylvania as an undergraduate. Had a bit of let's call it a detour. I spent some time in public accounting. I worked for Price Waterhouse. I spent some time in private accounting at Salomon Brothers. And then I was fortunate enough to find my way into the hedge fund business with a focus on the arbitraging of public convertible securities, long bond, short stock, call it a volatility play or a relative value play. Did that for quite some time in a number of different venues, initially on the buy side, ended up at Drexel for a few months just before the bankruptcy, just after the bankruptcy. Very interesting journey. Then spent some time at Smith Barney, running their convertible securities trading business for a couple of years until I lost them a lot of money and I lost my job. That was in so long ago. I don't even remember when. I guess it was 1993. Probably lost the firm $10 or $15 million. And amongst the people who weren't happy with my performance was Jamie Dimon. And I ended up losing that job and started my own firm shortly thereafter, was in partnership with a subsidiary of AIG. So that was in 94. I ran that business along with some senior partners through the end of actually 2022. But the financial crisis in 2008 was a major watershed in my career. We were running a huge business in September of 2008. We were running $3 billion of capital. We had 75 employees, office in Connecticut, office in Hong Kong, office in London. And basically, shortly after Lehman failed, we lost about half our investors' capital. I became depressed. I became disengaged. I was confused. I spent a couple of years trying to rebuild my business. All the while, our assets went from $3 billion to $300 million. Our headcount went from 75 to 25. And that a lot of sort of emotional and social stress around that. And then I found out about a program at Harvard University called the Advanced Leadership Initiative, which is an opportunity for people at a later stage in their life, often at a transition stage, like I appeared I was going to be at, to go to a place like Harvard, take any class in any school that they wanted to take, and figure out what you wanted to do with the rest of your life. And that was absolutely the most incredible, transformative, learning, growing year and a half of my life.
Wow.
And I'm a very different person today than I was back then. I have two examples that I use to explain to people how different I am. I have a memoir that I haven't written, but I have the title of, which is called From Gordon Gekko to the Dalai Lama. And so my hedge fund days, I just wanted to make as much money as possible and enjoy and waste money on the tangible benefits of that wealth. Today, well, I know, and I was never Gordon Gekko from a legal perspective, and I'll never be the Dalai Lama from a spiritual perspective. But what I'm working towards is leading my life in that kind of spiritual, caring, human-loving way, while at the same time applying the world of finance, the skill that I developed over 40 years as a professional. And so through that program and learning and meeting other people, one of the fellows in the program with me was a guy named Eric Jacobson, heard about this thing called impact investing. And this was in 2013. And what we saw back then, and with all due respect to the people who came before us and the people who've been on similar journeys over the same time period, what we saw was a lot of wonderful, well-meaning, smart, dedicated people who didn't sit on a trading desk in 2008 and lose half their net worth, right? Or didn't have to deal with the yelling and the screaming and everything else that goes on. And I traded through the crash of 1987 too. So these are things that were deeply embedded in me.
You got some war wounds.
I have some war. Well, I would call them war lessons, or as
war
my
lessons.
coach would say, the gift of adversity. And one thing that Eric and I brought to it, what we didn't see a lot of in the impact investing space, was we both had the ability to write checks. And so we felt one thing that we could do is bring that power to write a check into the businesses whose product or service benefits, let's call it humankind, the environment, or social justice issues, without all the rigmarole and the trustees and everything else. We could just do it. So we thought we could begin to do that and bring together our friends, a small group of friends, and invest. Maybe you can say we began to some extent as an angel group, but we quickly moved into what Gratitude Railroad is today, a professional organization with 6 full-time staff focused on high-level diligence of companies, and then bringing people in like us to invest alongside us, and to some extent echoing what we learned at ALI, the Advanced Leadership Initiative, where there are lots of people who have the capital to invest, but they also have the time, the energy, the experience, the connections to help make the companies in which they invest better. So that's how I got to impact investing in Gratitude Railroad.
That's incredible. Yeah, I love the one thing that I've loved seeing over the last, let's call it, maybe 3 years or so, maybe even a little longer, 5 years or so, is the talent from traditional Wall Street coming into impact investing in an awesome way, right? Like sort of this way where it's a humble way, but it's also like I have a lot to bring to the table, right? And it's sort of that combination, intertwining, like you said, the sort of talent, skill sets, going through the rigors of traditional Wall Street, bringing that experience to impact investing, where perhaps it's been a little bit more, to me, it's been more a little bit nonprofit like ideology a little bit originally. Maybe the first decade or two, it's kind of had that feel for me. But I've seen this amazing leap by talented people coming into this arena to help in ways that I think the industry kind of hasn't had before. When you look at traditional hedge fund management, Wall Street, things like that, and then you say impact investing, how would you sort of define or illustrate impact investing for those who aren't familiar with it or come from maybe traditional Wall Street background?
Well, one thing just to add on to what you said, what you said was very resonant with me. One of the things that we thought about as we built Gratitude Railroad was a plan to bring a Wall Street attitude to impact investing.
I love it.
And again, with all due respect to the wonderful people who work, we wanted to bring to it that professional way of diligencing, analyzing, making investments, holding the founders up to the standards that they would need to meet from any firm. We didn't want it to be different. We didn't want the adjective impact to be a pejorative. It was a positive. What we feel is, and this is to your question about what is impact investing? Impact investing, the way that we apply it at Gratitude Railroad, the way I apply it with my own investments that may be outside Gratitude Railroad, is investing in founders, entrepreneurs who are serious people, business people, but have aligned values. They're authentically seeking to make the world a better place. They are just not, so-called putting lipstick on a pig or washing or anything like that. They really hold these values. And so part of it is I need to see them across the room from me or across the Zoom screen and really know whether or not they actually mean this and they believe this. And that as the business grows and improves, that they'll stick to those values. I think that's really important. And also to answer the people who are concerned about, the softness of it or the concessionary part of it. I think that, when people say, well, social impact investing or, returns aren't that important, what I really believe is that a founder who is beholden to investors who want to see, quote unquote, market rate returns, who are responsible to their employees who want to earn a living and have their own desire to become wealthy, provides a stronger outcome, right? The fact is, one of the reasons that Eric and I developed the themes around Gratitude Railroad was the inherent weaknesses in the philanthropic model. Philanthropy is important, but there's bureaucracy, there's manipulation by large donors. There's the fact that every time you write a check, they're just going to woo you for the next check 5 minutes later, and the money just goes off. It does good work, but it just does good work. If we can stand up businesses that will eventually become self-sustaining and generate revenue forever and grow to cover the U.S. or the world with their services, we've done a much, much better job of making change.
Speaking my language. We touched on Gratitude Railroad a little bit, but let's give it a little bit of a more robust sort of mission and vision. Why did you and Eric start it? I guess take us back to maybe those first conversations about the creation of it. Sure. and maybe its overall mission and vision.
Yeah. So again, we were both together at this thing called Advanced Leadership Initiative at a place like Harvard, where I went there. I went to Penn as an undergraduate and thought Harvard was a bunch of, stuck up, arrogant people. And I'm sure that aspect exists. But I was astounded by the people we met, by the professors, the students, and the learning that we had. And we were charged, right? Here we are. We had this quote of 2 full semesters on the Harvard campus to figure out what we wanted to do with the rest of our lives. Eric had started and sold a couple of fintech businesses and then was in the private equity business and was building a very beautiful business during that. So how can we make the world a better place through the one thing that we spent our lives dedicated to, which was capital? And so Eric began to think about it and then brought me into the conversations. How can we do this, right? And again, if you think about the ways we think we can make the world better, one is philanthropy. We just discussed the weaknesses of philanthropy. And we also know that about 90% of philanthropic dollars go to educational institutions, healthcare institutions, and religious institutions. So there's this tiny sliver that's addressing the things that we can address through business. Let's call it climate and social justice. So that was one thing that we wanted to tackle. A lot of people we know, especially the people wealthy enough to be involved in impact investing, are active on the policy side of things, right? We give money to politicians, we advocate, we lobby, but back then, especially in 2013, we weren't getting from the government what we wanted. That's so much more stark right now. And it means that the only place that capital really can be controlled by people like us, and that you don't need to be wealthy to use your capital in a manner that's better for the world, whether it's how you bank, how you shop, where you buy your things. There are many ways to be better. So we felt that we could do that. And by improving, let's say, or building on what existed in impact investing and bring our skills as business builders and investors to that, we could inspire other like-minded people to invest with us, with the proviso that we were going to make as much money for them, if not more. I look at it as when you're investing in something that benefits from climate change, you're investing in a trend anticipating way. The world, regardless of what people might say, is getting more diverse. And more people want to deal with a broader range of human beings. And so we could stand up the businesses that would best benefit from the changing of the culture and the changing of the environment, and then tap into all that great wealth that wants to make change. And here we are in 2025, without getting too political, more and more people are recognizing the only thing that we have control over is our capital. So the idea was, let's build a business that's as professional as the businesses that we had. I had a $3 billion hedge fund. Eric had $100 million private equity business. And we took those skills and the people that we built it on to bring them into the impact investing world and making it equivalent.
One of my favorite things to chat about is some of the portfolio companies, because I think I like to paint a picture and an idea of what type of startups, impact investing is sort of looking at. What are these founders building? What are they trying to solve for?
Mm-hmm.
So maybe if you could touch on maybe, two or three that not your favorite, but just ones that are sort of top of mind and sort of easy to chat about.
I appreciate that, and I love to do that. And for me, and to some extent, I use this as an excuse also. I fall in love with a vision. I fall in love with a founder. I fall in love with a product. And I have Gratitude Rail's research team that says, okay, you love XYZ, but the numbers don't work, or the valuation is too high. So it's a great partnership from my own personal perspective, as well as for that, obviously, of all the investors that work with us. One company that I like to talk about a lot because it remains in people's minds deeply is a company called Recompose. Recompose is in the post-life death industry. As you may be obvious to you, right? Cremation puts a lot of pollution, carbon into the air. And I have a lot of respect for people's spiritual values and religious values. And for some people, understand for many people, cremation is the way to go. But it does create pollution. Burial is also something that's deeply meaningful to certain people. But taking land away from productive use, from open space, from wildlife, and putting tombs there is also inefficient for the environment. And oftentimes, the chemicals that are used in the process can damage the environment. Recompose provides composting as an alternative to cremation and burial. So the idea is you can do something very beautiful, very natural, very green in a manner that serves your own spirituality as well. And so Recompose, when we first, and what I love to, I think about it in the work that we do, when we first invested in Recompose, which is probably about 5 years ago now, recomposition, human composting was only legal in one state. Now it's legal in about 20 states. And the Gratitude Railroad community has helped advocate for that. So for example, in New York State, it was up for legalization, and our governor, Catherine Hochul, was reluctant to sign the bill. She was getting a lot of pressure from religious groups that believed that human composting was undignified. So along with other people from the Gratitude Railroad community and my impact network, we campaigned and explained and brought in environmental groups that explained from that perspective why it was good for the environment. And she signed the bill on the last day of 2023 before it expired unsigned. So that's one company. Another one that's similar, I happen to be a big fan of composting, is a company called Wasted. Wasted is in the porta potty business. Well-known, large, fragmented business that people use all the time. When you go into most porta potties, the first thing you see is the smell. That smell comes when you combine the liquids and solids and they create an ammonia. That slush, that slurry that where the liquids and the solids are combined has to be sent to a sewage treatment plant for cleansing. So there's an expense involved. There's a tipping fee that the owner of the porta potty has to experience. Gotcha. Wasted's concept is let's separate the liquids from the solids. They've done a lot of science on both the technology to separate them and what you can do once you have possession of liquids in one bin and solids in another bin. The liquids can be processed into a nitrogen fertilizer, very valuable for farmers, not using the chemicals that come from the way that most nitrogen fertilizers are made. And because the solids are not impacted by the liquids, they can be effectively composted into a soil amendment. So first thing, the most important thing that they do is they create a better user experience because there's no more ammonia smell. Then instead of having this tipping fee that they would have to pay to the sewage company to process their waste, they have two revenue streams. So on an equal basis, they have lower costs than other porta potty companies. They can charge less money and keep a similar profit margin. They can charge the same money and have a higher profit margin. Interestingly enough, right now, because there's such demand for both the experience and the greenness of it, they're actually getting a premium. But really important, one of the things I do to describe some of the companies we invest in, I use a phrase called climate to the people. In this case, right, you're bringing a product to the consumer. It's a better experience because you don't have the same aroma. And it's an opportunity to teach people who don't think about the environment. There's a sign in the porta potty that says, this porta potty is cleaner and smells better because. And this porta
Yes.
potty serves the environment so you're bringing people in to the environmental conversation in a positive, economically viable way. They are their porta potties are so in demand. They're making them as fast as they can, and they're renting them as fast as they can.
Obviously, we all share that same experience.
Right.
We've shared this many times. If you go to any music festival or
And they
sporting
have a big
event,
festival
anything,
product. They do a lot of festivals.
that would be prime real estate for them for
Yeah.
sure. If you got one more, that'd be great. Then we
Sure.
can kind of
There's
move
another
on.
company that we just did a second round in, called Glacier. Glacier has a product that combines AI with robotics. And as we're working towards zero waste and we're working towards making it easier for people to recycle, people are trying to send things to the MRFs, the multi-use recycling facilities, in one bin. And normally there are human beings who have, like, I'm using my hands. You can't see that on the podcast, but there are human beings who go through this conveyor belt and they're trying to separate the items as clean as possible. It's dirty, it's dangerous, it's inefficient. So Glacier has a robot arm that sits in the MRF, in the recycling facility, and based on instructions from the AI, can identify the items to pluck out of the stream and separate them more quickly and more efficiently. So it's good for humans, it's good for the process, it's good for the environment.
The innovation in recycling is happening, and the waste compost, like everything you're discussing, is sort of really finally kind of getting, I think, its moment a little bit, because we have, like you mentioned, AI, robotics. The technology is sort of catching up to the problem,
right?
Which is and look, at the end of the day, it's all about education as well, because traditionally, people just put everything in one recycling bin, but often it cannot be recycled at their local facility, and it ends up actually going to a landfill anyway.
Exactly. Can I add one more, because I want to talk about something?
Absolutely.
Not composting. So the one more company I'll add is something called May, M-A-E. And May is an app service that allows people of color to connect with doulas of color. So it's unfortunate in this country, as smart and as wealthy and as medically advanced as we are, the maternal death rate in the people of color community is significantly higher. And a lot of that has to do with access. A lot of that has to do with proper respect and attention in healthcare facilities. And they have found that access to a doula who acts as a consultant, as a participant, as an assistant in the process of giving birth, from the time they're pregnant to the time they give birth, the outcomes are far better. But it's fragmented, right? Who's a doula? It's not like you can call up the doctor's office and say, well, I'm looking for a doula of color. So May provides an app that allows people who are seeking that kind of service to connect with other doulas. And especially as, let's say, there are changes in the way healthcare is provided to people, especially people who may not have full access to all the healthcare because of economic limitations. May steps into that breach.
So much in the telehealth space, and again, going back to technology sort of catching up to all these problems that enable these founders to create things that possibly couldn't be created a decade or even 15 years ago. So it's phenomenal to see these founders solving this stuff. We mentioned sort of like hedge fund, venture capital, a little bit about philanthropy. I want to kind of get your opinion on philanthropy and perhaps having some type of innovation. We talked about maybe the red tape and the inefficiencies within traditional philanthropy. There is a lot of venture philanthropy funds sort of existing. And I kind of want to get your take on this idea that philanthropy should take more risk because of how their capital stack is prepared for them. They have this sort of the ability to take more risks. Now, obviously, their donors need to understand how they use the money. But like you said, if it's using the money and then always coming back to the sort of to ask these same donors for more money, the idea would be, hey, can venture philanthropy or some type of model where there is risk involved, where traditional, maybe like nonprofit environment can invest and through a philanthropic financial instrument into startups where they do take a risk because they have this access to capital that is, it has some tax benefits to it, right? Let's call it what it is.
Yeah.
But I just kind of wanted to get your thoughts on it. if maybe the next generation of philanthropy has a little bit more risk tolerance to maybe get those returns, and you have just maybe a generation of an organization that doesn't have to go back to donors for more money because it's in perpetuity, it sort of makes money.
That could be a very long conversation. I'll throw out some ideas.
Sure.
I would say that a lot of my thinking about philanthropy is influenced by the book Winners Take All. You familiar with that book? Really interesting book that basically talks about the egos and the manipulation that comes from the major philanthropists. Mackenzie Scott is the opposite of the message. What is good in philanthropy, what is bad in philanthropy? She basically writes checks without encumbrances, without all kinds of details, without all kinds of expectations. So to some extent, her model of handing capital and allowing them to do what they need to do best is something that I tremendously respect. And the other side of what I think about in philanthropy, which also has its own controversies and complications, is effective altruism. Right? What is efficient? How do we do things efficiently, but also with a heart? And I think the biggest knock on effective altruism is that it doesn't have a heart. And then in between is something like World Central Kitchen, which I think is one of the most amazing not-for-profits. So they're feeding hungry people in areas devastated by war or by environmental events. You've just got to give them money and let them do what they do best. And that's an amazing thing. But at the same time, there has been a push for how do we make philanthropy more efficient, more effective? How can it not just be a drain of capital? There's a partner in the Gratitude Railroad Network deeply involved in the quantitative analysis of grants and the return on that. And I think to some extent, my position, which was, let's say, very stark when we first created Gratitude Railroad in 2013, is modifying because I think there are quantitative ways, sort of like externalities in the environment. I believe we should have a price on carbon. And one of the reasons we have the problems we have right now is people are polluting without regard for how they're heating the planet, right? Every time you turn a gasoline engine, you're changing the planet. The same thing in philanthropy. People just are not seeing the full range of the benefits. So I think part of it is that how do we identify those economically high returning donations? At the same time, so many philanthropies have ways of generating revenue. I've been involved with a few in a deep way, and one is in a non-impactful way. I was on the board of the International Mountain Bicycling Association. Mountain biking is something I love to do, but within IMBA, International Mountain Bicycling Association, was something called Trail Solutions. And they are the country's premier trail designer and trail builder. So here is this organization advocating for more trails closer to home. That's their saying. But they have this this business, this for-profit business that provides a significant piece of their revenue stream. That fits with me really well. It's important work. It's lasting work. You build a trail, it lasts forever, and it has all kinds of health and economic benefits. And that's part of that work of effective altruism. You build a trail system, people come to your community. They ride bikes, they stay in hotels, they go to restaurants, maybe they buy bike parts, and it just it brings together.
It has a compounding effect to it when they do something like that.
Exactly.
Yeah.
So there are ways to do it that make a lot more sense. And that's what I think is possible. But there is a quote unquote philanthropic mindset at the same time. And the difference is, as Eric and I stepped into this world of impact investing, we're risk takers, right? I write a check for X. If I lose my money, I can stand that. But in the philanthropy world, especially when you're dealing with major donors, like account for every dollar. Don't spend any money on the team. And I think that's another big problem in philanthropy. There's a reluctance to pay people to do a good job. And I've met many brilliant, hardworking people at various not-for-profits to which I've donated. But mostly they're sacrificing income for the cause. Why should that? There's a guy, an author named Rutger Bregman, who wrote a wonderful book called Humankind, and now has another book coming out soon called Moral Ambition. And what he's working to do is to encourage younger people right out of school, undergraduate school or law school or business school, mostly law school, sort of building on Ralph Nader's work, where he took people out of Harvard Law School or other law schools, Stanford, and said, let's go to work and let's protect the environment. But they all work for pennies on the dollar. And today's world, where lawyers at the major law firms make hundreds and thousands of millions of dollars. It's a big sacrifice. How do we create a cohort of young people coming into the world who, instead of dedicating themselves just to making oodles and oodles of money, doing things that don't necessarily mean anything, and move them into public service? But how do we do that also in a way that allows them to earn a reasonable living? And I think we need to overcome that prohibition of paying people, maybe not market wages, but something akin to that, to encourage more and more brilliant people to do this kind of work. I think that's another model.
I think there's just been organizations or even donors, right? They don't want to see their donations go to somebody's salary, right? But then, like Charity Water kind of famously set that example of 100% of donations go to, the organization's work, where the salaries and the corporate side of things is funded privately by, somebody else or a cohort of people, but I look at it as that in order to solve water equality around the world, you have to have the smartest people in the world working on it.
Exactly.
And, if it's a 25-year-old, that's going to be able to get paid, $300,000 somewheres because they're uber talented, and they get paid $60,000 to come work for, whatever type of organization trying to solve a problem, well, then the problem's not going to get solved. So I think it's us maybe on the donor side too, being like,
great.
I want my donations to go to hiring the best talent to figure out, water scarcity, to figure out early childhood education, whatever it might be that they're passionate about. It takes people to actually do it, and talented people to actually do it. So hopefully maybe that will change where.
And look, there are a lot of wonderful people, right? It's not, I don't just like, the people
of course.
The people who are in it today are wonderful, but they're making a sacrifice. Maybe they can, or maybe it's by choice. I want to give you another example of ways to think about moving charity along the road. I advise a venture capital fund called BrightEdge that's captive to the American Cancer Society. The American Cancer Society touches almost every cancer researcher in this country, if not around the world. They have the access to the best knowledge and research and information. Who better to invest in products at the edge of curing cancer than the American Cancer Society? Currently, the BrightEdge Fund, is exclusively a DAF, but there's always conversations, how do we broaden it? How do we take in more capital and let the American Cancer Society earn some money from all of its charitable work and help claw some of that back? I would say that, again, within the traditional world of philanthropy, there's a reluctance to make that change. But they have such an asset. Just like INBA has the asset of the best trail builders in the country, which they're happily promoting. American Cancer Society has the best research that any fund would want to have access to, and they can monetize that. And many not-for-profits have information, knowledge, and contacts that they can monetize.
Yes. I'll end on a couple questions here.
Sure.
One would be, since 2013, over a decade now, in, let's say, the impact investing industry, what are some of the learnings you've learned? Maybe has the landscape changed at all for you in a positive or negative way? Just talk about those learnings over the last decade within the sector.
I would say the one that's consistent, I like to say people are funny about money. People, especially people who have limited wealth, have to be funny about money, so to speak. They have to find ways to preserve it. But people are reluctant to use their money in what they may consider a non-traditional way. If Merrill Lynch or Goldman Sachs says the S&P 500 is where you should put your money, regardless of fossil fuel exposure or tobacco exposure or coal exposure, that's where it goes. And people are reluctant to step out of that bucket. People don't want to talk about investments. Like I think the work that I do, right? You think about the 3-4 companies that we spoke about. I speak about them with joy and pride and honestly, authentically knowing that they're good businesses. But other places, talking about human composting is taboo to begin with, right? Talking about porta potties at dinner is taboo, right? And even like banking, right? For me, right, we all know that if you bank with, let's say, J.P. Morgan or Citibank, they're funding some of the worst companies in the world, and your money sitting in deposits sits there. Now, they offer a bunch of ancillary services that are highly valuable and important, but I also do a lot of banking in another Gratitude Railroad portfolio companies, Climate First Bank and First Women's Bank. Their names tell you exactly what they're about. One's addressing the climate issue, one's addressing the inequity that women see in the banking world about getting loans. to encourage people to bank there. But it's so hard to get people to take their money and put it in a bank that they don't know well.
Yep.
People are reluctant to do that. Gratitude Railroad and many of the impact funds in which I've invested, they're on fund one, they're on fund two. Their AUM is $25 billion, it's $50 million. I don't want to do that. I want to invest in Andreessen Horowitz, right? Because it's so big. I don't want to invest in a hedge fund that isn't Citadel or Balyasny because they have billions of dollars and decades of experience. I understand from some theory, and I don't want this to sound like a willingness to be concessionary, but I want to be the first investor. I want to invest in fund one. There's a lot of information out there that shows that managers in fund one and fund two have their best performances because as they get bigger and bigger and richer, things change. Not always the case, but things change.
It's like the first album theory. You want an artist, like you want to invest in an artist on their first album.
Exactly.
Because if it's their third or fourth, they're not going to be the same person. They're not going to be as hungry and motivated.
Exactly.
Right? And so their first or second is always going to be, not always, but like 90% of the time is going to be the best two things they ever produce in their life.
So that's a learn, right? I mean, it's not, I've been selling financial services products for 40 years from the time I started the hedge fund business. But this is a little bit harder. And it's how do you get to people to see what they're doing, the benefit of their capital. And if there's some extra perceived risk, it's offset by the joy and the externalities. And in the long run, will be offset, I believe, by better returns. I think that's one of the most important things.
Last question I'll have is just around, maybe advice for emerging, impact entrepreneurs coming up and trying to figure out, maybe they know what they want to build, but they don't know, who to go to and how to raise, capital. They're not in San Francisco, they're not in a city that's often sort of invested in.
One thing that's easy, many funds, many entities like Gratitude Railroad on their website have a portal for people to apply, to say, This is my company, this is what I do. Will you take a look? And everybody has filters, like Third Sphere does it, K-Port Capital does it, Gratitude Railroad does it. And those are three that come to mind. But I encourage entrepreneurs to find that and find those opportunities. It takes persistence. It takes a lot of time. You've got to have a lot of calls with people like Howard Fischer. And most of us are going to, say no or stop responding to emails and say no without saying no. So you have to have conviction and you have to be patient. And you just have to show up in the rooms where people are. I have met, literally hundreds of entrepreneurs at this point, and I find them and they find me. I try really hard. I can't speak to everybody, of course, but I try to give everybody, 15 minutes, half an hour just to hear and see if there's somebody else that I know that they can connect with. But it's there are groups everywhere, especially looking to stand up founders who are not in San Francisco, Boston, Manhattan, wherever. But it's really, really hard. It's really hard. But there are all kinds of entities, the CDFIs around the country, assuming they remain in existence, are looked to help. There's something called an ESO, Entrepreneur Support Organization. There are ESOs all over the country looking to stand up. One I know well is called Making Startups, and another one is called Sky's the Limit. So there are organizations all over looking for underserved, underprivileged, underconnected founders who don't know. And I think, there are lots of boot camps also for founders, not the ones that come out of Stanford, and go to the typical well-known boot camps, but there are boot camps for everybody. And I think they're just, it takes persistence, Google, and some luck and a lot of time.
Well, thank you so much, Howard. This has been phenomenal. Thank you for taking the time. I know you're busy, and best of luck for the decade for you and the team with Gratitude Railroad, and keep on keeping on. Appreciate the time.
You too, man. It's great. I'm never too busy to get this word out, because the more you get the word out, I get the word out. Every person who changes based on this call, this podcast, we've done something important. So thank you, Brent. I appreciate it.